What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. Today we're going to talk about another recent court case, Foradis v. Commissioner. So this is Tax Court Summary Opinion 2024-13. This court case again deals with real estate professional status. So the taxpayers in this case, Timothy Foradis and Jessica Moore, were denied their rental real estate loss deductions by the tax court. The main issue was whether Mr. Foradis qualified as a real estate professional under Section 469, which, as we all know by now, that allows you, if you're qualifying as a real estate professional, is an exception to the passive activity loss rules, which disallow the deduction of your losses from rental real estate because rentals are per se passive activities. Those losses are suspended and carried forward until you have passive income. Then, if you qualify as a real estate professional, you can deduct your losses currently. So on their tax return, Mr. Foradis claimed real estate professional status and deducted the losses. The IRS challenged it. They lost an audit, went to challenge it. The taxpayers took it to tax court, and we have this case. Now, Mr. Foradis, apparently, he claimed that he spent significant time constructing what they call the carriage house, that's the property in question. That's the name they give it. So they call it carriage house. So he constructed the property with the intent to rent it out. He argued this should qualify as real estate professional status because allegedly he spent over 2,500 hours on the project during the year in question. Now, Mr. Foradis also had a full-time W-2 job where he works at the tax court tells us 40 hours a week. And even though he claims to work 2,500 hours, he had logs to back up his time. We don't know if they are contemporaneous or not. But the tax court just basically said that we do not believe that you spent 40 hours each week working at your W-2 job and an additional 48 hours per week on the carriage house project. So as a refresher, remember to qualify as a real estate professional under Section 469, you have to pass 2 tests that allow you to treat your rental real estate activities as non-passive. So basically you need to, first, you have to pass both tests. One, you have to spend more than 50% of your time in real property trades or businesses in which you materially participate. Now that's the key in this particular case. And then the second test is you have to spend at least 750 hours in real property trades or businesses. And real property trades or businesses are the things like construction, reconstruction, development, property management, leasing, brokerage. There's a list of 11 in the regulations. Now, generally, as we've talked about before, and there are many court cases out there that show this, if you have a full-time W-2 job, it is nearly impossible to qualify as a real estate professional. Now, one of the ways you have to substantiate your time as a real estate professional. And one way to do that is keep a contemporaneous log of your hours. Again, there's no indication that he had a contemporaneous log, but let's assume we did. The court they did not believe that he spent that much time on constructing this carriage house, they call it, while also maintaining a full-time job. My guess is he probably didn't have very great records, but again, we do not know for certain. They just flat out said they don't believe he spent that much time on the project and continue to work a full-time job. Now, in addition to passing those 2 tests, you also have to show material participation. So generally, a taxpayer materially participates in an activity that they own. They have to have ownership in the activity, and they have to be involved in the operations on a regular, continuous, and substantial basis. So there's several tests to determine material participation, and the most common being you participate more than 500 hours in the activity during the year. You participate more than 100 hours and more than anyone else involved. Or you perform substantially all of the work yourself. If you're married, then you can combine the time of both spouses for the material participation hours. Now contrast that to the two tests for a real estate professional. One spouse must pass both. So the material participation, we didn't even get to that point in this case because the court doesn't believe him. But the material participation in this case, he would have easily qualified. And one unique piece to this case is the court case. The information tells us this carriage house was supposed to be a short-term rental, but the taxpayers didn't defend this in any way to take advantage of the short-term rental loophole, which, the short-term rental loophole allows you to deduct losses from a short-term rental with material participation only. You don't need to qualify as a real estate professional. So I'm not sure why they took this position, or if they defended themselves in this case. That's unclear. Maybe they wanted to treat it as a short-term rental and they didn't get the average period of stay of 7 days or less. Because remember, a short-term rental with an average stay of 7 days or less is technically, under the passive activity laws rules, it's not actually considered a rental. So then it's not subject to the per se passive treatment like your more traditional rentals. That's why you only need to show or demonstrate material participation. So we don't know why they didn't defend it in that manner. But in any event, the outcome was Foradis lost the case. He could not substantiate. He spent more time in his real estate activities than his full-time job, and the court disallowed the deduction. So they had the disallowed loss was $22,376, which was about $5,000 in tax that they owed. So this is just another good example of how important it is to really maintain adequate documentation. In fact, they disallowed it. Tells me he probably didn't have very great records, even though all we're told is the court did not believe him. My guess is there's probably not very good records. And it also highlights the point to make sure you're using a professional, because a case like this, most likely they could have argued a short-term rental and taken that deduction. But for some reason, they didn't even bother going that route. There's no mention of it, other than the case does say the carriage house was rented as a short-term rental. So I hope you found value in this. I like to pull out some of these cases every once in a while and go through them just to highlight some of the concepts that we talk about on here. Anyway, if you found value in this episode, please leave a 5-star review and hit that like and subscribe button. Until next time, have a great day.
This audio segment was edited by me, Adam Rothstein. If you would like help editing your podcast or narrating your audiobooks, please email me at adamrothstein29@gmail.com. That's ADAMROTHSTEIN29@gmail.com.
So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.